Welcome, guys. Today's the 25th of April, 2018. Just to go through the disclaimer, any advice or information given in the room is educational in the nature and general advice only, does not take into account your personal circumstances. By viewing any material or using information presented by Bovarius Capital, you agree that this is general educational material and you will not hold any person or entity responsible for loss or damages resulting from content or general advice provided here by Bovarius Capital, its employees, directors, or fellow members. Spot currency trading has large potential rewards, but also has large potential risks. You must be aware of the risk and be willing to accept them in order to invest in spot forex markets. Don't trade with money that you can't afford to lose. This website is neither a solicitation or offer to buy or sell spot forex or other financial products. The website, no representation is being made in that the account will is or likely to achieve profits or losses similar to those discussed in any of these sessions. Past performance of any trading system or methodology is not necessarily indication of future results. This information is purely for educational purposes only. Fantastic, guys. Now, to get the ball rolling, let's get the economical calendar up. Just to be giving you guys a little bit of a breakdown, a little bit of substance. Markets are moving quite fundamentally. I think the major thing, just looking at the news that we're seeing is strong dollar. It's across the board. It's up. It hasn't been as high as this for a while. Stock markets are down because of the fact. I think also, let's just flip through. See, stock suffering. Now, on top of that, guys, bear with me. There's not really much else in the news in regards to fundamentals. We've got a little bit coming out in regards to the fact that if you look at it at the moment, fundamentally, the dollar has no reason to be strong. Yeah, there's nothing really going on. Trump might get a second term. Who knows? It's clearly institutions pushing the price up, guys. There's big purchasing power behind these kind of moves, and that's what you guys need to start to understand and relate to. Now, bringing up the economical calendar, today, guys, we've got oil inventories. Yeah. Now, that's probably the only other thing that I think is going to be moving the market. If it comes out unexpected, you could probably expect a bigger move. Obviously, oil's been breaking key levels. It bottomed out at like nearly $25, and now it's retraced all the way back up to 60, 75, $70 it's trying to touch. Now, oil is directly correlated with the dollar. So if the dollar's strong, like it is at the moment, the oil price should be flickering down. And what it's trying to do, where I think it's going to come back down to find orders. Now, the market doesn't move in a straight line. It always goes up, down, up, down, up, down. So even though the fundamentals are the fact that the dollar should be weak, it can always go up off the back of sentiment or going up to collect orders, if that makes sense. Yeah. Now, apart from that, we've got rate decision tomorrow. That's important. It's going to be unchanged unless they do something unexpected here with the ECB rate decision. I think we're probably going to see maybe a little bit of a push up because it's going to be unchanged. So it's going to be maybe a stronger dollar, weak euro. But I don't think they're going to hike it. I think it's going to come out expected. I'm not really expecting big moves, but that's news there if you guys have got positions or make sure you guys are bringing your stocks up to break even. Yeah. This evening, you've got some news out from Governor Powell of the Bank of Canada. So be wary of that, guys, if you're holding positions. Markets will be moving late evening towards the back end of the night. So do be aware. Apart from that, the only other thing that you've got is you've got a lot of Japanese news out on Friday. This is massive stuff in the morning, Friday morning. London Open's probably going to get invalidated because of these moves, but Tokyo session Friday will work very, very well. Yeah. Now this stuff is going to be expected. I think that's why you're getting the big push up from dollar yen at the moment. Traders are positioning themselves. I think it's expecting inline expectation, but you're going to have to look at the statements in the press conferences as well. Similarly, like ECB, you want to see what Draghi's saying in the statements. Is he hawkish or dovish? He's generally quite dovish in statements, so you need to see what his tone's like. People who watch this to get an understanding of the rate decision is one thing, but his statement gives you an indication about what's going to happen at the next rate decision. So when they may hike the rate, maybe they keep it the same, maybe they bring it down, you'll get indications. So as a trader, you need to be watching these events, going through them time and time again. They happen once a month, guys. They don't happen every week, but once you've seen 10 or 20 or 30 situations like this, you should be quite confident and understanding, guys. Bank of England speaks on a Thursday, ECB is generally on a Thursday or Wednesday, FOMC is generally Wednesday evening as well, guys. Start to get yourself in line with it. Rate decisions are crucial. If it affects the currency massively, if they use it to control the price. If they hike the rate or decrease the rate, it plays with the supply and demand. So if they want a weaker dollar, they increase it, vice versa, guys. This stuff, you guys need to be understanding it. It's basic textbook stuff. I know we haven't gone through a lot of it, but this is about preparing yourselves to be traders, managing big funds. If you don't understand this stuff or you can't correspond with it or you think it's too hard, it's not. It's simplistic stuff. It just needs to be repeated time and time again. Nobody's born a trader. No one's born a footballer. No one's born into a profession like this. It's something that you develop over time. They say it takes 10,000 hours to become an expert, and that's really what you lot need to be doing. You need to be eat, breathe, and sleep the markets. It's the only way that you're going to become adined with it. And don't ever fall in love with the result. I'm seeing a few clients have a few losing days or a few winning days and giving themselves, you're playing with your emotions. You need to trade as though it's second nature. It's like it's embedded in you. You do it as a habit. The results are irrelevant. As long as you keep going through the process, the results will eventually show, guys. Yeah. Now, obviously, apart from that economical data-wise, there's not a lot out there. Yeah. In regards to looking at the news, there's not really anything coming massively. This is here that U.S. Treasury yields extend 10-year mark. It's the highest the dollar's been since Trump's come into power, guys. Yeah. So obviously, it's looking for some orders. It's probably going to be pushing itself back down. Looking at it, stocks have probably had, generally across the board, if you're looking at stocks, they've had a bit of a smash this week from the strong dollar, vice versa. Apart from that, there's not really much else out there. Market-wise on Bloomberg, just bringing it up. There's not really anything sustained. Just let it load up. I think personally at the moment, the main things that we're looking at, if you're looking at the dollar's strong here. We were speaking about the dollar in the last live room session. It's obviously had a continuation. Now, to bring it on a chart, just moving on a little bit, yeah. Dollar yen generally gives you an indication of what the dollar's doing. And this is the move that everyone's been talking about, yeah. It's quite a big move if you look at it. Let me just zoom in. Sorry, guys. It's this massive move here. Now, in trading terms, it's not a big move. It's like 200 pips from the low, yeah? But if you look at it on a daily, yeah, it's clearly broken out, guys. Look at this. It was in an inter-term range here. If you remember in the live room, I said one or two things, guys. You're going to get a big move either way. That's like the mean or the middle. You've got to understand. There's something you guys need to understand, some basic concepts that I'm putting in, especially to the live rooms, yeah? You guys need to understand the fact that the price always reverts back to the mean generally. It's called order flow. The market will never just run one way. This type of move here, with the volume size behind it, you know it's institutional power, guys. Now it's clear they've bought down here. Institutions with this big move here have clearly bought, yeah? The last 2 weeks, the markets have been driving fundamentally strong off the dollar. And that's why you've got this 400-500 pip move up. Now, what they're doing here, guys, is they're going to push it through levels here, where retailers are going to jump on and push the price up. This is the liquidity pools that I'm sure you guys, I know a lot of you guys, it only really makes a difference when you're building positions on the larger accounts, yeah? But it's things that you guys need to be made aware of, especially if you've been trading for like 2 years or 3 years, you'll start to understand it. Now, I think there's going to be two options here. The price is definitely going to come back in. Retailers are the ones that are pushing this over the high at the moment, yeah? Retailers are the ones that are holding it up. Now, institutions are either getting out, and now institutions aren't going to rebuy here, guys. They're going to rebuy down here. I'll tell you why. They don't buy it at the high, they buy at the low. Now, it's clear they bought at the low down here. This is the textbook trading I was talking to you guys about. You guys are selling, they're buying. When you guys are buying, they're selling. If you guys don't sell at the high and buy at the low, and you send me P&Ls that are, I can clearly see that, I'm gonna start to get a little bit frustrated, because if you're not following the first rule, which we go through time and time again, sell high, buy low, you're never gonna be a profitable trader long term, because it's wholesale. That's what institutions do. That's what we're looking to catch. So guess what, guys? That's what we do. Make sense? Great. Now, looking at it, that's that big move from the dollar. That's what everyone's documenting in all the news. Why is the dollar so strong? It's come off the back of treasury yields. Obviously, strong currency is going to be weak equities, guys. You should know that by now. If you have a look at the equity markets, you've had a big, not a correction, that's a small move for US markets. It can correct that in a day. Yeah. Now, that is obviously due to the dollar. Yeah. Now, the thing that you guys need to be aware of at the moment, direction on the dollar long term is dependent on what happens with Trump, guys. Yeah. Now, if Trump stays in power, you're probably going to see it push back down. If he doesn't, you're going to see it fly. And that's the two ways about it, because he's seen as, when he came on board first initially, as uncertainty. That's why he pushed the dollar down. That's why the markets did this massive extension off the back of him coming into power, if that makes sense. Now, all we know here as traders, guys, yeah, this is Trump into power here. This is him coming in. The market comes down. We thought Hillary was coming into power, and the market's done 25% off the back of that. So that was clearly weak dollar, because that's what extended it up. If he gets a second term, you won't see as violent move from it, but you will see a higher high for sure. Now, equities, currencies, commodities, they're all interconnected, guys. They all have high correlation. Now, looking at it at the moment, I can just see I've been triggered on an order on euro dollar. Now let's just do a little bit of analysis. Let's just look at it. 15-minute time frame, yeah. Because I like to see what's going on. I'm buying at the low. That's one thing I like this position, yeah. I want to be aggressive with the management, guys, yeah. I don't want to be having no more than like 4 or 5 pips, and I want to be getting my stop to break even, and then I want to be allowing the trade to tell me where it's going to go. Now, looking at the analysis, there's definitely a buy down here, guys. It's second touch. It's lining up. There's a supply level here as well. And I think personally that's a good range. The market's moved quite well today. It's come down off the London Open quite clean. Look at London Open. It's clean, guys. It's clean as cut. A lot of you guys aren't trading. I'm not gonna lie. I'm gonna be perfectly honest. A lot of people are not trading London Open. It's worked as clean as you can get on a lot of the pairs today. Dollar Swiss, perfect. Dollar yen. Let's just look at it. Giving you an entry would have gotten you out perfectly. Euro pound, and I've been talking about euro pound, guys. This is the choppy days where you guys forget about it and don't trade it. Yeah, still gets you out. Yeah, it still gets you out though. Still takes it. You look at the rules, it still will get you out with a trailing stop. It's near the high. You want to be putting 1.5 top pips on the high. Clearly gets you out. Now pound, look at that, guys. What, you guys couldn't catch that? It's clean, straight down, straight through. Doesn't even come back. The trailing stop wouldn't have even been triggered. It would have at least got you out for 5 pips. I think there was a few clients that caught some big moves off the back of this cable move. There was quite a lot of take profits hit. I will say one thing. The last 2 weeks for trading conditions in regards to the market have been phenomenal, guys. This dollar strength has really given movement in the market. Now, this is the thing that you guys need to understand. The reason why the dollar is so important, 60% of the currency, 60 to 70% of the currency is based off the back of US dollars and sterling and euro, if that makes sense. Sorry, guys. Now, that's why it's so important to understand what it's doing. It's the biggest player in the market. It's the one with the most amount of forefront, or it's the one with the most amount of potential. And it's the one that we all watch because it has the most movement. Yeah. Now, if this level invalidates, guys, yeah, I want to be seeing stop losses. I don't want to be seeing you guys just in a situation where you're not trading without stops. You're not taking the positions out. You need to be using stops. They remove the emotion, especially for a newbie trader. What they do is they allow, for example's sake, for you to be confident at cutting the position with no emotion. If you start to trade, what will happen is if you don't use a stop, yeah, this level could get invalidated, guys. It could take me out, but it shouldn't be something that you should be frustrated about. It shouldn't be something that you should be emotionally worried about. If you're going to be a trader and you expect to win every single trade, I tell you something for free, guys. You're living in la la land. It's never going to happen like that. As a trader, when you open a position, you allow yourself to be put in a position where you can lose money. What you need to do is embrace the risk of the capital. There's also an opportunity for you to gain capital, and that's what you guys need to be starting to embrace. A lot of people want to make money, they want to be a trader, but you have to embrace the risk, guys. You can't be in a situation where where you can't or you don't want to take a loss. Losses come, they're a part of the game. Because you lose, or for example, the best analogy I can put across to this, because if you have a bad experience with a woman, are you going to stop seeing women? No, it's not like that. It's the same thing with trading. If you have a bad experience or you blow an account or thing, nobody as a trader has not blown an account. Anybody that's been trading the market 5, 10, 20 years, everybody's had their bad patches, everyone's had their good patches. Sometimes people at the beginning, especially when you start trading, you get a full sense of security because you win or you lose. If you follow the basic rules that we embed in you guys, you'll start to see it in your P&L quicker, sooner rather than not, if that makes sense. Now, that was that move from the dollar. Now, obviously, dollar yen and dollar Swiss move correlate. I'm just working on some stuff that it's not basic. It's really going to only appeal to the guys that have been trading for a little bit of time. But it will make sense if you've traded for 12, 18 months and you're just holding a balance or you're just yo-yoing up and down or you're not really making any money out of the market, if that makes sense. Obviously, I know a lot of you guys are newbies. Some of you are looking at it, some things. This is the fastest way to get you to profitability. This is the most consistent way that I've found. I've taught loads and loads of people to trade. Not only juniors, not only clients, I've taught loads and loads of people to trade. The best way are the students that are the ones that listen and pay attention to detail. If you guys don't pay attention to detail, it could be the difference between a small loss or a big loss. And that's the crucial thing that you guys need to understand, yeah? You need to be understanding, for example's sake, that you're not always going to be right, and you can't let the fact that you lost or you won affect the next thing. But yes, Patrick, pound yen. Let's bring it up. Obviously, pound yen, guys. I'm gonna be completely transparent with you guys because I don't really breed this with guys that you can't be trading pound yen unless you've got a big account. Yeah, pound yen is named the Dragon. Yeah, it's nicknamed the Dragon. It's traded by any retail FX trader that trades over £1 million or £500,000. They all trade pound yen because of the movements in it. Now, pound yen moves very similar to pound dollar, but it sometimes goes out on the correlation of the yen, if that makes sense. So they're not always in line. They've got about a 67% correlation because sometimes the yen throws it out. Yeah. Now looking at it, just bringing it up, yes, it's consolidating here. Now, if you're asking me, it's clearly in an uptrend. It's clearly following what cable's doing. Cable's come down, and similarly, it's done the same thing. So let's just look at it side by side. Can you see, guys? It's done the same thing. I'm expecting cable to turn from these levels, if you ask me. I'm not expecting the dollar to continue. This type of big move up, the market has to come back somewhere to find orders. It's quite a big move. It's gone clean. Institutions are clearly involved, but it's got to come back to find orders down here somewhere. If it continues like this with this kind of strength, I'll be incredibly it'd be unlikely that it doesn't come back. I'm confident that it will come back. Obviously, you've got ECB in a bit that could push it into some orders and it could change sentiment. But at the moment, what you're looking for is a bit of change of sentiment. So the dollar comes back a little bit to find orders. And that's the crucial thing that you guys are looking at. Now, in regards to pound yen being range bound, yeah, pound yen very unforgiving. When you're trading pound yen, it gives very good risk rewards, tight stops, guys, yeah? The ranges are a bit bigger. That's why you need a bigger account because to do with margin, guys, yeah? Now, obviously, when you're looking at pound yen, it's definitely consolidating, but I want to be buying it down here in these levels, yeah? And I want to be selling it in these levels. 1 minute, someone's just asking me a question. Bear with me. Yeah, so just looking at it, sorry, Paul just corrected me. ECB's tomorrow, guys, not today. We've got oil inventories today. So looking at it, I don't know why it's so tight at the moment. I think the markets are consolidating. They're in a situation where there's not a lot of news out now. They're just looking. But the yen, because of the Bank of Japan speaking on Friday, I think it's like consolidating. It's got big news coming out of it. That's why it's going to be a little bit rangy now. We expect it to be a little bit rangy. We think that it's going to be in a situation where it could possibly come down to find orders, and that's what I'm looking for. You know that the institutions are pushing it up. They're probably going to push it down to find more orders and continue it above the high. Now, looking at it, things dollar Swiss, this is that dollar strength. You guys can see that. Textbook trading moved out of the range. It's clearly moving fundamentally. Now let's look where it's going to pull up or how it's going to pull up, because it's going to pull up at some point. It's running up into places where there's going to be orders. Now looking at it just moving back on a daily, the orders are still a bit high. It's in no man's land. This is no man's trading. It generally should come back. If this goes up so violently to these levels, like just straight, there's institutional power by the movement and how long it's taken. Now, this is me bringing the time management into it. Yeah, the time management. You can tell if the market takes slowly goes up. There's not as much orders behind it, guys. It's not as aggressive as what it should be. Yeah. You're looking when the market's more violent like this. You know that there's orders behind it, guys. Yeah. If you ask me, it's in levels here. The overall levels are here. They're on a daily time frame. But there are going to be orders here. You can see if you put your support and resistance, there's clearly orders here. Now this is now the range, guys. This is where I think the market's now going to range for the next few weeks. It depends on what comes out of Bank of Japan. I think it's going to be in line. Let's just drop it down. Let's just go back through some basics, because support and resistance. There's some new guys in the room. I know I can see. A few more guys have popped in. Looking at it, just bringing it up. 5 days. Yeah. Now let's put it on. Now guys say that when they see me draw support and resistance, they're like, you just put a level everywhere. Is anywhere where the price is reactive. Now support and resistance, guys, is completely different to supply and demand. It's completely different to order flow. Yeah. Support and resistance, you never use it for trade entry. You only ever use it for targets and trade management. You use it like a roadmap in the market. You use it like a tom-tom, guys. Yeah. Now, what you'll find is that now I've put the rest of the range in. Now you'll be able to see if the market's going to be ranging next week in the next few days. It'll give you an indication. I expect it after these big violent moves. I expect, look, market's gone against me. It's clear breach. Rather than letting it hit my stop, I just cut it. Emotionless. I don't care if I lose. Now, what I'm looking for other entries, guys. Yeah. Now, just scanning through, dollar yen is in a zone here. It's a little bit premature, but I'm willing to take it. Now, looking at it, the market is moving into key areas. Obviously, the US session is opening up pre-market now. You will start to see some orders come in. Now, looking at it, this market's clearly selling off. It's clearly breaking out. Yeah. So if euro's going down, yeah, what does that entail? That the dollar's still strong, guys. Now, look, it is continuing to go up as well. Yeah. This level has the possibility, guys, of that to be invalidated. I've got to use my trade management in regards to understanding the fact that I've got to use elements. I've got to use discretion as a driver. The longer you've been driving the car, the better you are. You know you're not going to be speeding in the rain or in the sleet or the snow, because you need more stopping distance. The same way, when you know the market's driving fundamentally and you're trying to catch the top end or the bottom end, you need to manage trade management with aggressive. You need to manage up the trade. You need to take profits when they're on the table, guys. Yeah? So the euro is clearly breaking off. Now, there's one thing I'm going to make you guys aware of about the euro, because I know a lot of you guys look at it. The euro is very manipulated, guys. It breaches levels. It's the one that all the institutions trade. When guys run algos, when guys talk about hedge funds, when they talk about running, they generally run it on the back of euro dollar, because it's the one with the biggest amount of liquidity. I think 60% of the trades that go through euro dollar are through algorithms. Generally, the market's made up of algorithms nowadays. It's a technology world. We've got to move with the times. What the bank started doing about 5 or 10 years ago, when they understood that computers were going to be the thing of the future, they spent a hell of a lot of money into basically employing computer geeks or people with the best knowledge about IT to program computers to trade for them. Obviously, it does three major things. It removes the fact that they don't need to give them a high salary or high bracket. They don't need holidays. They're more efficient. the computer can exit more trades than a human. But obviously, guys, the human programs the computer. So the human is in turn the one that makes the rules. It's the one that gives it the rules to get in and out. Now, when you trade, especially when you look at euro dollar, this is stuff here. This is textbook systematic algos. You can see how it works. Works like ladders. It uses risk reward to get in and out. The algorithms will buy and sell of key rules. Now, when you trade, yeah, when they trade, in big news events, what happens is the banks turn off the algorithms. That's why you get the whipsaw. I'm sure you guys have seen the whipsaw in when news comes out, where the price whips up, comes back down. Before any big news event comes out, the banks always turn off the algos. Yeah, the reason why is because the algo can never foresee the news, so it can only react to what's going on. It's still a computer, can't interpret it. Obviously nowadays they've got a lot more advanced. They do have algorithms to interpret news and make decisions off the back of it. But fundamentally trading like that, it's not as good. The algos are generally built off the back of technical analysis. They have a systematic set of rules to get in and out. Now you guys, the reason why I'm touching on euro dollar is euro dollar's quite choppy. Like, can you see it breaches levels like this to find orders? This is the type of manipulation where they use the liquidity to push the price round. This is why a lot of people don't trade the euro, because they find that it's manipulated. What I want to teach you guys is to get entries in the manipulation, because the price never comes back. If you manage to get entries in the manipulation, yeah, now it's really just the first rule: buy low and sell high. That's what we'll teach you to get the prices in the manipulation. The quicker you can pick this up, the quicker you'll fall in love with euro dollar. Yeah. Now cable does it as well. It's a bit spiky. It will breach a level for 10, 15 points and suddenly come back. Happens over trading sessions. That makes sense. So prime example of it, if I bring up euro dollar and just zoom out, is for example where the price rallies one way consistently and then just turns. That when it turns on one trading session like that over like 50 or 100 pips, it gives you an indication that it's come down and found orders. The reasons why the institutions do that is because it's zero sum. They have to confuse you as retailers because they're taking your money at the end of the day. The banks hit the retailers, guys. You've got to understand that. That's why their profits aren't as high as they would like, but they provide the liquidity. So when they lose, you're winning from the banks basically because they sit with all the liquidity. Now, that's not massively wrong. The reason why I'm just putting this on, guys, is to give you guys an indication of how I draw it, why I draw it. Some guys are new. I know some of you guys know this by now, but we need to embed it. We need to stay. Now, looking at the euro, yeah, it's continuously falling. It's going to find some kind of support somewhere. It's not just going to fall off the face of the earth. It's in a key buy zone now. If you ask me, guys, I'll be trying to catch buys on this. This is a good, if you guys know, if you look at euro dollar, to break out of this range, it's going to need some news. At the moment, there's nothing I don't think that can break it out unless they get an unexpected hike of the rate, yeah? Or if they reduce the rate. It's coming out as expected from what they're saying tomorrow. Now, this is crucial. The same thing's on cable where it's sitting between 138 and 144. This is the range. This is textbook trading for traders. You know that it's easy, and it's easier to catch 500, 400 pips on a move like this if you catch the position. Now, this is a VIP entry, guys. I'm telling you something for free. These are the levels where you want to be catching buy trades because it's got a high probability to turn and grow the account. Yeah. So when you guys were asking, how do I grow a 10k account to 100k? It's by catching bigger moves on the longer time frames. Now this is giving you an opportunity. If you have a look at it over the last 3 or 4 months, it's only giving you a few opportunities at the high and the low. It's clear here. This is a long term. I'll probably be buying it a little bit lower, but I'll be trying to catch it on the London Open or any breakouts so I can get my stops to break and just follow the market back up, guys. Yeah. Now, when you're following it back up, you intraday trade it as well. This is what real traders do. This is getting you. Now we've got a lot of the basic stuff out the way. We're getting you to sell high, buy low, stop losses, in trade management. One thing I'm going to notice, guys, some guys have been hedging and stuff like that. You still use the same rules. You still use for entry. The market's all about entry. You've got to sell high, buy low. That's the only thing that's going to give you the position. I don't want to see guys hedging in and out of positions and getting caught when the market's not moving. At the moment, the market's moving fundamentally. So don't forget, guys, hedging strategies and stuff like that where the market's catching the trend, DC cross, are going to work phenomenally well. Yeah? Whereas if the market goes a bit rangy like it does in these areas here, you're going to see that mean reversion holds up a lot better. Now, at the moment, the movement that you've had over the last 10 days is phenomenal. Markets have been pushing clearly one way or the other. And that's what you guys need to start getting into to board about. Now today, we've only got oil inventories coming out in about an hour or two. Be aware of it. If it doesn't come out obscured, I doubt you're going to get a very, very violent move either way or the other. Yeah. Now, this level here, if you're looking at it to me, I'll be looking to buy this. It's key zone. If it breaks out from this level, yeah, I'm getting an indication that there's going to be big moves. Now, this is what you guys need to understand. It's going to allow you and teach you to see whether the fact that the market's trending or ranging. Now, at the moment, I expect it to reverse, as my opinion as a day trader. I've watched the screens for over 8 or 9 years consistently, yeah? I understand how markets move. I think this is clearly going to turn. It could have a little breach because obviously institutions are selling from here, guys. Yeah, this is textbook building up orders: 1 million, 2 million, 3 million, 4 million, 5 million. Yeah. Now they've built up a position of 5 million lot shorts. You retailers are giving them liquidity to get out. I don't think it's going to be in a situation where it's going to completely breach. It might breach it slightly. I think it's going to reverse and come back up into these highs. Who knows? Obviously, you don't give any investment advice over here. It's purely educational purposes. This is a strong level if you look at it, I think personally. This level is perfect, but I doubt you're going to get down here. You're going to need some big moves. That's a big move to come back down here to go back up there. But they're building positions here all the way up. I'm confident the market will bounce from this type of order. So I'm prospecting a forefront of the fact that you're going to get a reversal in the dollar. And this is just my opinion, but I think it will hold up if you look at the markets, look at the fundamentals, reading the news. Now, this is how you get yourselves start to understand the fundamentals heavily, guys. Yeah. Now, coming back into it, it's in a level. Yeah. The level's probably a little bit lower. Because of the move down, you guys can see the supply level's it's just slightly below. So I'd wait for an entry. There it is, guys. You can see it. It's come up there, yeah? I'll just wait for a retest. Don't forget, guys, if it runs in, I'll generally get a second test anyway, yeah? Now, just to go through it, because I'm going to label this live room, there's 5 to 6 basic rules, yeah? The first rule, sell high, buy low. Now, you want to catch the interim trend. So you're looking to look at the trend for a 5-day period. I generally plot support and resistance on a 5-day range because it gives me an indication of what the market's doing. Let's take a clean chart just to give you guys that rundown as well. Oh yeah, Euro Pound. I want to discuss Euro Pound as well, guys, yeah? Euro Pound has gone back to its usual ways. It's not really moving. 2 weeks ago, it was moving phenomenally well. Look at these moves that you're getting from it, yeah? It was moving. At the moment, Euro Pound is looking for a bit of direction. It's in a buy zone, but I prefer to buy it down here. But with this move where it's running out of momentum, you can see, guys, it's running out of liquidity, guys. I'm confident with the time. If it was going to have gone, it should have gone by now. I think it's going to breach these levels to come back to find orders. This was news, if that makes sense. But start to trade this, guys. This stuff is textbook. It's easy. It's tight ranges. Getting 4 pip risk on London Open. If you use that with a hedge, it's phenomenal. You're creating volume, guys. Yeah? And volume and rebate are safe ways to generate income out of the market. That's what I'm starting to embed into you guys. I want traders. I want people to be able to push the button, do 100, 200, 300 lots a day. There's a guy nicknamed the Flipper, yeah? And apparently the guy does, on a £1 million account, he does 100,000 lots a day. It's heavily leveraged. It's on the futures exchange, but there's guys that flip contracts. They're volume channels. And they're cash cows to the prop houses, to the banks, to anybody. Because at the end of the day, if you can turn volume, you can make money, regardless of whether you win, lose, or draw. This is what I'm going to embed into you guys. Because I want you guys to be phenomenally understanding about the market. I want you to use your skills in the markets in regards to trade management. There's different levels to trading. If you've been looking at the market for 6 months compared to you've been looking at for 2 years or 5 years, your understanding is going to be phenomenally different. And where your understanding goes phenomenally far, guys, especially as students, is when you're sitting on money that you've won from the market. When you're 100, 200, 300% up on your trading accounts and you know that the money's fearless. When you come with that fearlessness, that's when you really make money. There's a saying, there's something that I'll hold with me forever. When I was a junior, when I was trading, everybody used to say that I was fearless about the capital and about the trade sizes, opening big positions, holding them with conviction. I blew a few accounts, guys, yeah, because I let my ego come to the table where I believed in the opinion of the market and I didn't trade for price. I traded for the fact that I thought the market was going to go up. That's the most quickest way for you guys to lose money. Yeah, the fastest way for you guys to lose money in the market is try and predict where it's going, time and time and time again. Because what will happen, guys? Mathematically, you're going to run into a string of losses. You've got a 50% chance that the market's going to go up or down. If you use technical and fundamental analysis, you're pushing that up to 60-70%, guys. Yeah, that's what you guys need to start understanding. You've got to use your skills. You want to be skillful in the market, not lucky. Anybody that's lucky, I've seen a few guys that made big trades, got lucky, giving them a full sense of security. You'll just give it back. The market will take all your money back. It's like gambling. When you go up in the casino, one time you might give it all back. That's why you need to use systematic, you need to use skill. Now, one thing I'm going to say that I'm noticing, some guys are breaching risk management, especially for your account sizes. I know as you get more confident, yeah, you start to scale up and you start to increase trade sizes, but be wary of your account size, guys, yeah? If you want to trade like a professional, you want to have a risk budget. You want to be budgeting yourself on your risks, if that makes sense. Now, whether that be you're on £1,000,000 account and you're risking 1% a day, and you're risking 10k, or you're on a 100k account and you're risking 1%, £1,000 a day, who knows? But I want to start to see risk management being implemented, especially from you guys that are coming to the stage where you're getting to consistency. Because if you want to trade big funds, or you want to get backing from us, or you want to get my money with investor funds or someone's funds, you need to have an element of low risk or low drawdown. Nobody's going to give a trader money that can lose 100% or make 100%. They want to see low drawdowns with reasonable uplift. We're not asking you guys to triple accounts. We're not asking you guys, we're just asking you guys to consistently make 10 to 20% out of the growth of the account. The rebate is an added benefit. If you're making 20% of your account in rebate a month, in 5 months you've redeposited your account in your bank account. The deal that we got here is phenomenal, guys. Nobody's offering it. A lot of guys that we speak to now, we've just pumped a hell of a lot of money into marketing, guys, yeah? Everyone's like, what, do you guys really pay this out? I'm like, deposit an account, trade the volume, and then send us the invoice and we'll see. We pay it out, guys. It's phenomenal. People in the prop houses do this. When I was a junior trader in a prop house, I was given $1 a lot. I used to do 1,000 to 2,000 contracts a day on $1 per lot. And the account size was only 50k, 25 to 50k. Started on 10k and they aggressively moved it up. But realistically, with this kind of leverage, if you've got 50 to 100k in account, the money's phenomenal. You can easily claw back 10% in rebate and 10% growth of the account. Now, one thing I think that a lot of you guys are forgetting, you need to concentrate on growing the account, guys. You need to concentrate on the growth here, guys, yeah? Now, 5 to 10k is reasonable, but you need to understand, you need to get out of the hurdle so you tripled or doubled the account. That's where the fearlessness comes from, where you're confident in your decisions, you're confident in the repetition of doing what you're doing, if that makes sense. So to give you an idea, when you become fearlessness, that's when you can make the decisions and you're truly content with your decisions so you can repeat the process. There's something called rinse and repeat. I see it from the guys, the young guys that come in time and time again. Some guys are just rinse and repeat guys. If you give them something and they see that it works, they just rinse and repeat it, if that makes sense. Now, I know the strategies work. I've traded, I've made money off it, I've lost money off it. It's whether you guys as students can take it, implement it, and rinse and repeat it. Yeah, there is an element where you need 10 or 20k that will price a lot of you out of the market. But if you know that you could do it, anybody can get 10 or 20k. That's really where the barriers to entry are very, very low, guys, and that's why there's such phenomenal uplift on it. But you have to embrace the risk. If you blow an account, don't just stop trading. You've got invaluable information. It's going to take you 2 or 3 years to get consistent. It's like if you drove a car and you crash the car, what are you going to do? Not drive again? No, you're not. You're gonna understand that you understand your vehicle. There's one analogy that I like, and I like this a lot, guys, yeah? When you're driving, they say that you don't know what you're in, or you don't know how to drive until you've had a big accident. I think this is so true, because you don't know the capacity of how things can go wrong. Same thing with a trading account. When I was a junior, I turned a £4,000 account to £95,000, and I lost 60 or 70,000 pounds of it on one trade on gold. Yeah. Now back then I had no understanding of risk management. I had no understanding of concept of selling high, buying low. All I was doing was punting on the price. I was buying and selling. In turn, it's something that can be done. I've seen a lot of people. I saw a junior once recently, about 3 years ago, turn £1,000 to 23k in 3 trading sessions. using a scalping strategy. There's obviously things that you guys can work out within the markets. Smart guys will find out. The money's on the screen. You just need to work out how to extract it. If that makes sense. And this is what you guys need to start to embrace. Yeah. Just to go through the rules. I know we've run out a little bit of time and it's pressing on. Yeah. Just to go through the rules, just so everything's clear with you guys. Yeah. What you guys need to be understanding, as soon as you implemented the first rule of buying, sell, and buying high, selling high and buying low, sorry, always use a stop. Yeah, it's the most invaluable bit of information I can give you. On a 10k account or £1,000 account, it's you losing 50 quid or 500 quid. If you're trading on £1,000,000 account and you take a loss for 10 pips, and for example's sake, it's moved right against you, what you guys need to understand is that it can be the big difference. See what you guys have just done. My stop loss has been triggered, yeah? Now, this is a bit tight, guys. I've moved it up, but don't forget, it's moving fundamentally strong. So I'm being aggressive with the trade management, guys. It's against the counter trend. The news is weak. It will turn. If it takes me out, I'll just get back in. I made the rebate anyway, yeah? Now, this is what you guys need to understand. You have to read the fundamentals to give yourself that understanding of what's going on. Now, looking at it, if I'm selling dollar and I'm expecting a reversal, I'm looking for a second touch on euro dollar because of the long-term zone that it's in. Yeah, euro pound it's gone just like very choppy. Look how choppy that is. Very choppy. This is why people don't trade it, because of this choppiness. Yeah. I think euro pound, if you ask me, is run out of steam. It's going to be going down. It's collecting orders where it's going to breach. If it breaches, I think you could see real low a break of the low, just because of the way the orders are getting built up, guys. So I'll be looking to sell in these levels here. Yeah. Sterling is doing a similar sort of thing as the euro. See, it's a little bit out. I think it's going to bounce from these levels. This level 139 is crucial. 139 is a big psychological level. Now, looking at it, this is big move. This is fundamental move, guys. You guys can see it. See it on the screen. Now, what you guys want to be doing is putting the support and resistance back in. Use the support and resistance as a roadmap for trade management, guys, yeah? The roadmap, what I mean by that, use it for exits and targets. If you've seen the price run up through 2 or 3 levels, take the profit. Why are you leaving it on the table? 30, 40 pips a day as a day trader is good, phenomenal profit. When I started out initially, I was just targeting 10 pips a day. Your pips could be worth 500, 200, 100, £10 a pip, £1,000 a pip, £10,000 a pip, who knows? The beautiful thing about trading is uncapped on the top side. Your trade can get as high as you want, as low as you want. Just to get a bit of feedback, guys. Any guys got any questions, any queries? I know I've just gone through 1 or 2 rules. I'm going to go through the rest of them because I want to summarize it for new clients as well. Ference, Kennedy, Patrick, John, how are you guys? You good, guys? Good, yeah? Just to get a bit of feedback. Patrick, any questions? Good, good response. All right, let's continue then. If there's nothing on board, anything you guys want me to go through? I'm okay. Good, Ference, good results. I've been seeing it. Kennedy, good. Everyone's responding. Ference, we need to speak. I've seen your results. They're getting very good. I just want to go through a few basics, just implement a few rules, just to make sure you're going through them time and time again. Good, Kennedy, thanks. Okay, let's just wrap up a few more rules as well, yeah? The third rule of trading. Now, this one is the one that I'm getting seen breached time and time again, guys, yeah? I've seen about 4 or 5 people breach this rule, yeah? The rule is simple, yeah? Never hold a losing position over a trading session. So what I mean by trading session is there's 3 trading sessions. You've got European session, starts in the morning, about 6 o'clock. 4 to 6 is the European range. Opens at 7, closes at 4:35, Germany or UK. You've got US session, which kicks off pre-market 1 o'clock, opens at 2, closes at 8 to 10, depending on time. And then you've got Asian session, starts at 10, finishes at 4 to 6. Now, these sessions are the time the market moves, yeah? Now, if you've got a position and the market hasn't done what you thought it was going to do, it hasn't bounced from that supply level, hasn't hedged out properly, yeah? Whatever it is, yeah? What you've got to do as a trader is you cut your risk. I'll tell you why, guys. Never hold a position that moves 100, 200, 300, 400 pips. It's an amateur mistake. It's pure retail. And what you're doing is you're falling in love with the position rather than the actual process. The reason why you never hold a position for that long is because as a day trader, you lose your advantage. As a day trader, you're nimble. You can get in and out. You can catch the moves. You have to be adapting to market conditions. Never fall in love with a buy on euro. Never fall in love with a sell. Allow the market to tell you which way it's going to go. Now, if you look at that concept, yeah, if you hold a position for 2 or 3 days and it's moving against you, it's going to dig a bigger hole in your account. If you know as a trader for 10 or 20 pips, if it hasn't gone in your favor, cut it. Find a new position. It's like if it doesn't work out with a girl, go and find another one. If you miss a bus, another bus is coming. If you miss a train, another train is coming. You've got to start to use these things in the back of your mind. Trading, and especially trading long term and trading big money, is all about psychology, guys. It's about keeping yourself mentally fit. You need to be like an athlete. You need to train yourself to be more competitive, understand what's going on. Because the reason why 90% of people fail, guys, is mindset. I'll tell you why. I'll let you into a secret. You guys that fail, a lot of people that fail, a lot of people that don't make money in the markets, you use excuses, yeah? You guys fail because, yeah, the reason why you don't make money is mindset is 60 to 70% of the game. The theory, I can give the theory to anybody. I can give it to a kid, I can give it to somebody who's old, but the psychology and the mindset side of it is what kicks in. That's what we work on you guys with so much. The mindset and psychology side comes in the trade management, when the trade runs up in your favor and you were in the position and it's took you out for break even, or the market moved against you and then for 2 sessions later it reverted. That's the psychology side of it. That's the side that gets worked on. That's the side where as students, we're invaluable as mentors, because that's what you need guidance through. You need guidance through the rocky road. Once you come out the other side, and once you make money and you're growing accounts and you're holding balances, you'll never need us again. It's something which you'll become self-sufficient. Now, a lot of people blow out before they get to that consistency side of it, or lose an account and stop doing it. If you ask me, if somebody told me that I can make millions and millions of pounds, if I lose 100k, I'm not going to stop. I'm going to go and get it back. I'm going to get it all back. That's just my mindset. That's me personally, guys. When I lost that big money off the back of Brexit, it took me about 18, nearly 3 years to get it back, but I got it all back. That's the one thing I'd say. The market's a way of transferring money from the impatient to the patient. The guys that get greedy, the guys that get aggressive, the guys that want to... I used to trade, especially when I was younger. I'd use 100% risk on the account. I would have no care in the world to risk management. I used to feel like I was on top of the world when I was winning. I was bidding big trades, but I was losing big trades as well. And that's the side where you want to remove it. You want to make yourself more skillful. Yeah. So the reason why you never hold a position that's losing is because it plays with your psychology. If you're logging into your screen and you've got to look at these losing trades, it's losing. It's going to stress you out. It's going to make you make the wrong decisions, and it's going to mess up your psychology and mess up your mindset. You're going to think you're a loser because you're losing. Winners win and losers lose. It's a fact. There's so many people that will drop out. I've seen juniors come in and just buy on the high. We had a junior before. He could not buy on the high and sell on the low. The guy was doing it completely wrong. He lost a hell of a lot of money in the market. The guy just wouldn't listen. That is what I'm embedding in you guys, yeah? The reason why you don't hold the losing positions, guys, is because if it hasn't moved in your favor and you've protected it, that anything can happen. Terrorist attack, order flow, some news comes out. When you're not watching it and you haven't got your stops up at break even, you're going to lose money, guys. That's why you have to be aggressive in the trade management, protect your positions. Now, you don't hold losing positions because it plays with psychology. It puts you in a loser's mindset. It makes you think, question what you're doing. Am I doing this right? Am I doing that right? You need to stick to the rules and be confident in your conviction. Be clear. Be understanding. Be decisive. And precision is something which I need to speak to you guys about. Precision is crucial. I've seen so many people send me London Open with missing trading stops, not putting take profits in, not putting stop losses in, having problems, and then they ask me why hasn't it worked? Because you're not being precise in regards to the orders. Guys need to be double checking your orders. You need to be double checking your stop losses, double checking your take profits, double checking trailing stops. I'm seeing a lot of trailing stops not getting put on, and the trade's not getting taken out because you guys are putting 10 orders on and you're missing 1 or 2 trailing stops because you're in a rush or you're in the way to work. I understand it can happen, but understand if you have an execution error where you make a mistake, you can't blame the market. You've got to blame yourself. So if you lose money because of that, you shouldn't use that as an emotion to affect your decision. If that makes sense. You should be clear. Now, on the last 5 minutes, what I want to discuss on is psychology. because this is the crucial part of the game, psychology. Yeah. Now you guys have heard me say this: winners win and losers lose. Yeah. When you trade and you're just losing and you're doing everything wrong and you're caught in retail mistakes and you're following what retailers do, you breed an ideology that you're going to lose because you're losing money. You're logging in, you're trading accounts which you're losing and stuff like that, guys. Yeah? What you want to be doing is building up an infantry of trades where your stop loss is at break even. Now, some of those trades mathematically will run in your favor when you catch them correctly. Some of them won't, a lot of them won't. 60 to 70% of them won't. But why are you getting annoyed at the fact that you lost a trade at break even? You found out for free that you were right or wrong. Even if you lose 20 pips, so what? It's 20 pips. I've lost it. Even if I take 5 trades and they all go to loss, oh well, I lost. Don't let it upset you. Don't let it affect your next decision. Don't start gambling because of it. Keep your composure. As a trader, you need to be calm, concise, consistent, and you need to have conviction in your ideas and your analysis and your understanding. There's something in life, a lot of people will say it's about preparation. A trader is crucial to preparation. You need to prepare. You need to prepare to win. These are the stuff I'm teaching you guys now is preparing you to win. Reading the news, working on fundamentals, looking at market movement, looking at market analysis. After doing this for 12 to 18 months, you guys will be telling me, now the euro is going to go up. Now the euro is going to go down. This is why, because the orders are here. Fundamentally, the market's weak. Fundamentally, the market's strong. Technically, the market. These are the type of things that you guys need to start embedding. It's how you become an expert, guys, yeah? I want you guys to all be experts of the market. When you learn it, whether you have a day job, whether this is what you do, whether you put all your time into it, I just want anybody that's got a passion for the market and to make money to come along with me because this is free money. If you can adapt the things I'm teaching you guys, you can make a hell of a lot of money at the markets. No bosses, no one telling you what to do. There is a downside potential where you can lose some money, but that comes anywhere with the same risk that you can make money, guys. If you're going to go to something and make money with no risk, that's in a job. You ain't going to make the true potential. Someone's going to use you for 10 or 20 years, keep you in your place, and you're not going to get paid the full reward. This is exponential in the sense that you push the button and you make money. And the rules are simplistic. They're there on the table. All right? So just to sum it up, I know the live room's coming to an end now. You guys, any questions? I know I'm getting good responses. Everyone's quite happy. I know quite a few guys are logging in and out during the session as well, so I'm happy with that. I'm happy with some of the trading that I'm seeing. Obviously, markets are moving fundamentally at the moment. Be aware of that. So do expect, remember my views. I'm expecting a pullback. Expecting euro to go back towards the high. I'm expecting the dollar to come a bit weaker, guys. Yeah? Oil and food trees today. ECB tomorrow. Bank of Japan on Friday night. Thursday night, Friday morning. Remember that, guys. Holding any positions on the yen or anything like that, be aware of that. Yeah? Be aware of the going against the trend as well, because it's still quite strong. Wait for a confirmation. We're going to be working on correlation. We're going to be working on psychology. We're going to be doing some individual sessions. For now, any questions? Anything, guys? Anything anyone wants me to go over? No? Good. Good. That's good. It's always a good sign when people think. Just to get a little bit of feedback, you guys happy with the content, yeah? Is there anything you guys want me to go over? We're going to be doing some individual sessions and posting them as well. I'm going to be doing a London Open. I'm going to be doing a supply and demand as well, just because we've got some new guys coming in. I want it to be quite streamlined so they can watch the videos and just pick it up. So stay in tune, guys. It'll be put on YouTube as well, so watch out for it. Support us as well. We're trying to build a following here, guys. So great. I'm going to wrap it up for now. Everyone seems quite good. I'm getting good responses. Happy trading. And we'll see you soon, guys. Thank you.